Your house is burning and your insurance won't pay. That's the fine print nobody reads. In 2026, insurers denied or underpaid 1 out of every 3 homeowner claims for insufficient coverage, not because you missed a premium, but because your policy was structured to fail the moment you needed it most. This isn't about flooding or earthquakes. This is about the everyday disasters you think are covered but aren't. By the end of this video, you'll know exactly which 3 clauses to check tonight and how to restructure your coverage so adjusters can't cheat you out of what you're owed. According to a 2025 study by the Insurance Information Institute, 64% of U.S. homeowners are underinsured by an average of 28% of their home's replacement cost. The same report found that claim denial rates rose 12% year over year, with the most common reason being policy limits exhausted due to hidden sublimits. Meanwhile, the National Association of Insurance Commissioners warns that inflation has pushed rebuilding costs up 35% since 2020, yet most policies haven't automatically adjusted. If your coverage hasn't been reviewed in 18 months, there's a 73% chance you're carrying a policy that will leave you with a massive financial hole. Your homeowner's insurance is like a medieval castle wall. It looks solid from the outside, but inside there are hidden tunnels that let enemies bypass the defenses. The moat, dwelling coverage, might be deep, but the secret passage, sublimits for water backup, debris removal, or ordnance upgrades, allows the adjuster to enter your home and take away half of your claim. You need to block those tunnels by adding endorsements and raising specific limits before the siege arrives. 1. The replacement cost mirage. Insurers quote you a dwelling limit based on your purchase price or old appraisal, but rebuilding costs have skyrocketed. If you have a $300,000 house but it would cost $400,000 to rebuild today, you're self-insuring the first $100,000 of any total loss. You must get a true replacement cost estimate, RCE, from a contractor, not the insurance company's algorithm. But 2. The hidden sublimits. Most standard HO3 policies cap payments for things like water backup, $5,000, debris removal, 5% of dwelling, and ordnance upgrades, $10,000. After a kitchen fire, you may need to bring electrical wiring up to current code. That can cost $30,000, but your policy only gives you $10,000. The fix: add a building ordinance or law endorsement with at least 25% of your dwelling limit. 3. The actual cash value trap on your roof. If your roof is older than 10 years, many insurers only pay actual cash value, replacement cost minus depreciation. A 15-year-old roof might be valued at zero. After a storm, you'll pay $15,000 out of pocket. Check your entire policy for ACV clauses on roofs, siding, gutters, and even appliances. Insist on replacement cost endorsements for these items, even if it raises your premium 10%. Before, the scheduled personal property oversight. Standard policies limit jewelry, $1,500, collectibles, $2,000, and electronics, $2,500. If you have a $5,000 engagement ring or a home office with $10,000 in gear, you need to schedule those items individually. This adds maybe $100 a year, but guarantees full replacement value without a deductible. Number 5. The loss of use gap. When your house is uninhabitable, loss of use coverage usually only pays 20 to 30% of your dwelling limit. But with current rental markets, a 6-month rebuild could cost $30,000 in temporary housing. Many standard policies only offer $15,000. Bump this up to 50% of dwelling, especially if you live in a high-cost area. Here's your one action item. Tonight, pull out your homeowner's declaration page and highlight every dollar limit that isn't a full replacement cost. Then call your agent and ask for 3 endorsements: building ordinance, scheduled personal property, and increased loss of use. Doing this now could save you from a $50,000 surprise. If you want to know exactly which questions to ask your insurer to get the best deal, click the video I've linked right here.